I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name is Cody Bill, this is Logan Burgess. Today is September 11th, a WASDE report day. Let's turn over to the trading platforms here. We closed off the day. Corn down 7 1/4 cents, finishing off the day at 338 1/2. Soybeans down 18 3/4 cents. Wheat in Chicago down 13 3/4 cents. Hard red winter wheat down 13 1/4, and spring wheat down 11 1/4 cents. Now we did have some export sales out this morning. They were very positive for the most part for wheat. Corn and soybeans came in within analyst expectations. We also had some reportable sales out this morning. None of this really seemed to move the market as we were really eyeing the USDA crop report, though, Logan. What did we see out of the crop report that brought us lower here?
Yeah, we'll take a look at this table here. This really explains it. As we said yesterday, all the focus here is going to be on yield in today's report. And as you can see, the left side of this slide shows what the average analyst was expecting coming into today. The right side shows what we actually got from the USDA. And you can see corn yield came out about 1 bushel per acre higher than trade expectations. Soybeans came out about 0.3 bushels per acre higher than trade expectations. And for corn and soybeans, we saw sizable production increases, and we didn't see really a lot of demand increases to make up for it. As a result, we saw ending stocks quite a bit higher than what traders were expecting, and really pushed this market down quite rapidly after these numbers were released.
So, Logan, do you think that this number that the USDA released, both corn and for soybeans, did this surprise the market?
You know, I think the corn number in particular was a little bit surprising. People were looking for a relatively quiet soybean report, and it could be argued that we got that looking at the domestic balance sheet. If we look, though, at corn yield in particular here, this slide does a good job detailing past years when we've seen exceptional September 1st crop ratings and how the USDA moves their yield projection from August to the January report. You can see here that really since 1992, 94, 04, and 09, September was a relatively quiet report. For that reason, a lot of traders were looking for very minor changes to yield out today. And you can see here from the blue line, 2014, they modified their September projection 4.3 bushels per acre from what we saw in August. So I think that the historical context really was the reason why it was surprising today. Now the question is, where is yield going to end up? That we got such a strong yield number in the September report, because you can see that here we tend to see yields trend higher into October, into November. I think that's going to be one thing that's going to be kind of hanging over this corn market as we move toward harvest.
Absolutely. This would kind of imply that big crops continue to get bigger here. Now, Logan, when you look at soybeans here, obviously stocks to use, very critical. And really a lot of producers are trying to get a sense, all right, so we do have a large crop, or it seems as though we have a large crop based on the USDA forecasts here. But really, where does this leave a price target? I mean, where do we go from here?
Right. Well, it's been an exceptional last couple months here, I guess, in terms of the price of soybeans in particular. And if you take a look here, the blue bars do show stocks to use by marketing year. So this year, in particular, we're going to be returning to a marketing year similar to 05, 06, 06, 07, and that's not really any big surprise. A lot of people have been talking about this and projecting this really since early April and May. So the stocks to use situation in particular is not a big surprise, but I think if you look at the red line here, the on-farm price, that is one thing that people are going to look at. USDA is still projecting a $10 per bushel average on-farm price. That was shown in today's report. I think a lot of people are going to take issue with that, say that that needs to be moved lower here, and I think that that's kind of supported when you look at some of these charts over a longer time period, soybeans in particular.
Yeah, absolutely. Let's just take a look at soybeans here, because what you're seeing really is a support level back in 2009 and 2010. Really, this support level held almost a year long. There's many different tests. It was right around that 880 level. You know, we were right around that 878, 886 price level where we seem to hold back between 2009 and 2010. I wouldn't be surprised if we continue to drift lower toward that price level, especially with those the stocks to use ratio that you highlighted there, as well as the on-farm prices. Now, when you look at corn, it's a slightly different story here. We're trading lower. We finally broke through that 343 price level that was a support from back to June 2010.
Right.
Now I think there's a good chance those where I mark 1 and where I mark 2, those are price levels of 290 as well as 302. I think $3 is the next really the next stop here. It's what producers need to be thinking about. If we go down to $3, are you protected? Will you be profitable? There's a lot of producers out there that are saying no. So what are you going to do to protect yourself? Obviously, there's a chance maybe we do get a rally. Maybe some of the yields aren't as good as expected here. But you want to be thinking about, are you protecting yourself in the event that we do move back down to $3, because I think it's very likely.
Yeah, as we look kind of here next week and into the next several weeks, really, the threat of frost has been one thing that does have some traders looking for a little bit of bounce in this corn or soybean market. And I guess, in the context of today's report and in the context of this large bear market that we are in the middle of, if we do get a bounce in this market toward the early October, middle part of October, in my opinion, it's definitely a bounce that should be sold. The numbers out today, for the reasons why we detailed here today on GrainTV, point to a market that still has downside. If you have any questions about taking advantage of any bounce that we do see or making marketing decisions without a bounce, as Cody had mentioned, feel free to call our office here. Number is 877-472-4607. Thanks a lot for joining us here on GrainTV for a report day. We'll see you tomorrow to wrap up the week.